Adrian Lim, Senior Investment Manager at Aberdeen Asset Management, joins us now from Singapore. Aberdeen, of course, is one of the biggest foreign investor or foreign institutional investor in India, and they manage assets worth $9 billion. Adrian, always a delight to have you back on ET now. Thank you for joining us. Go to ask you the obvious question, which could have impact on global liquidity. What do you make of Ben Bernanke's testimony, and what kind of impact do you think that will have on Asian equities?
Well, according to Ben Bernanke, he has his message has been consistent. The Fed is supportive of the economic recovery, and that they will not taper or pull back monetary easing before the time is right. And they said that well, he said that the market understands them better, and there should be less volatility going forward from here on.
Adrian, so do you see risks of further withdrawals if the world liquidity is to tighten?
Well, it's difficult well, based on his comment, the withdrawal would not come until the economy is ready. And he was looking at inflation levels, he was looking at unemployment numbers, and those would be the key drivers or indicators that he would bank on before making a decision on tightening up liquidity again. So it seems that it won't be the case. That won't happen.
What's your outlook on Indian equities? Are valuations looking attractive? And do you still have an overweight rating on Indian stocks?
We do have an overweight rating in India. Valuations in India have always been high when you look at it from an earnings multiple measure, and when you compare it across the region. But when you look selectively at stocks, there are areas of value, and even times like this, there are areas where you can get reasonably priced stock. I think if you're selective, India is not expensive.
So Adrian, emerging market ETFs have got outflows in the last 1 month. What is the situation with your emerging market schemes?
It's been mixed. Our client base is quite wide. We raise money in North America and Europe, and here in Asia as well, both institution as well as retail sources of funding, and it's been mixed. I suppose everybody's balance sheet is slightly different, and there's always a certain element of rebalancing. We haven't seen we have seen some redemptions, but we have also been encouraged by subscriptions as well. So I would say that we didn't see anything unusual over the last quarter. The AUM levels remain pretty stable.
Adrian, let's talk about the macro setup. After the RBI move, just about everyone has slashed their GDP estimate for FY14. So after reporting a sub 5% growth for 2 consecutive quarters, what do you expect in Indian economy to pick up in the second half of this year?
Well, the economy itself is quite difficult to say. It's a large beast. But you can see that, for example, yesterday HDFC Bank released results, and you saw credit growth or loan book growth continue to remain strong at about 20%. Earnings growth remains strong at close to higher than those levels as well. So whatever the market is doing or the economy is doing, it doesn't mean that you won't get better results or inferior results in the corporate earnings. And what we try and do is we try and get exposure to quality corporate results regardless of the larger economy. Whether that 5% falls a little bit more from here, it's very difficult to say.
So what do you make of the recent move by the RBI to provide support to the currency and the government pushing for higher limits for FDI as well? Can these help in stabilizing the rupee at all?
I think well, they're linked but slightly different issues as well. The Indian government has been trying to stabilize the rupee given the very dramatic softness it's had during this quarter, and I think these steps will help. The deficit would require discipline on the side of managing the fiscal budget, sensible policy, but also a recovery in growth levels, and that's not clearly forthcoming within the next 1 or 2 quarters quite yet.
But these RBI measures would clearly hurt profitability of Indian financial sector. Have you changed your stance on the sector, or do you think these are just small temporary measures and they will not change the big setup?
Wow, that's difficult to call. I think over the short term, you could see profits being depressed or a challenge. At least the profit margins. We still think that there will be decent chunks of profit available to the strong financial institutions, but the margins will come under some pressure in the short term. We have a long-term view on that sector, and we pick stock on a long-term view, and I think over the long term, this impact would be muted.
Sector-wise then, Adrian, you cut your position in Unilever in the last 1 month. Are valuations now looking stretched for the sector, or are you worried about consumption stories slowing down in the near future? Because we've been seeing a fair amount of run-up in the stock price.
It's a bit of it's a mixed bag. We do manage cash flows as well, and whenever we have a slight moderation in our assets under management, we sometimes do trade downwards to manage exposure. I think the important thing is that we still have a large position in Unilever, and I think it's very difficult to extrapolate our reduction in the exposure as a time to sell or take profit. We are still very invested in levers, and we didn't take up the buyback offer. So obviously we think that there is more upside on this stock and in this business, and we like the management of levers, and we think that they will deliver over the long term.
Since you have a large exposure to Infosys, what is your take there? Do you think the company is finally out of the woods and they've got a plan in place, the top management will be able to now turn things around?
Oh, it's not out of the woods yet. I think the transformation and what Infosys is trying to achieve will take some time. It will take some time, and there will be some volatility. And it's an important transformation. They do need to get more customer-centric. They do need to be more sensitive to the market flows, and they do need to manage their cost effectively. And with that, a sustainable level of higher growth should come through. It's too early to call one decent quarter. We saw that in the December quarter, a lot of analysts were making very positive noises on Infosys. And then we saw disappointment in the following quarter in March as well. So one quarter doesn't make a trend.
Right, so you increase your exposure as well to the cement sector recently. What makes you so bullish on the sector?
Well, the cement sector is not firing on all cylinders. Capital expenditure is at cyclical softness. So there is a lot of capacity there that's not fully used yet. And India, is at the start of a multi-decade bull run in terms of cement demand. So if we have a 6-month view or 3-month view, we might not be adding stock, but we don't. We have a long-term view, and that's why we think that cement is still reasonably priced.
Indian market insiders are telling me that you have started to buy into Lupin. Why buying Lupin now?
Lupin doesn't represent the pharmaceutical sector as a whole. We like Lupin's business model. We like the way it steadily focus on its customers and increase its sales and earnings base very consistently over the long term. I don't think you can say that all pharmaceuticals have done that over the last 5 years, and that's why we have a small position in Lupin at the moment.
The Indian government as well has been pushing reforms, but do you see this window closing soon, as the government focus will now shift, full-fledgedly to the upcoming elections?
Well, there's a tendency for all governments to start focusing on elections, and you always have strategists that focus on the next election as soon as an election is won. But I think reform is as much about not making bad policy decisions as it is about making good policy decisions. And you can be populist, but if you don't have a bad dysfunctional policy, it can move the economy and the business environment forward. So we'll wait and see. But there's a lot of potential for reform in India.
Adrian, thank you for joining us.